A very warm good afternoon, ladies and gentlemen. It's an absolute honor to have the kind presence of our eminent panelists and the lovely audience. Albert Hubbard once said, "One machine can do the work of 50 ordinary men, but no machine can do the work of one extraordinary man." With these words in mind, I, Jasdeep Singh, on behalf of India Factoring, welcome you all to this amazing chat show, Factoring, a one stop solution for your global aspirations. On this show, we invite top dignitaries from the corporate world to have insightful discussions with them on various topics like factoring, technology, economics, etc. Before introducing you all to the eminent panel, let me tell you all a bit about India Factoring. India Factoring offers working capital solutions through the factoring product, aimed at converting your receivables into cash. The company is a subsidiary of a European bank, FIMB Bank PLC Malta, and is registered with the RBI as an NBFC factor. India Factoring is also 83 categorized authorized dealer. Through our global network, we offer one-stop shop solutions around receivables finance. Recently, India Factoring was awarded as the International Factoring Provider of the Year and was also the recipient of Best Deal of the Year 2022 award and is the market leader in export factoring. Now, without any further ado, let me introduce you all to the eminent panel. First, we have Mr. Ketan Gaikwad. Mr. Ketan Gaikwad, the Managing Director and CEO of Receivables Exchange of India, RXIL, is a banker with a career spanning 30 years. Prior to joining RXIL, he has held leadership roles in transaction banking in Barclays Bank and Standard Chartered Bank. He started his career with Bank of Baroda and has had multiple roles in Standard Chartered before heading trade finance in Barclays Bank. Mr. Ketan Gaikwad is a science graduate from Mumbai University and has a master's degree in management studies from Symbiosis Institute of Business Management, SIBM Pune. He has completed executive leadership programs from INSEAD, Fontainebleau, France, and advanced program on fintech from IIM Calcutta. We welcome you, sir. Then we have Mr. Ravi Valecha. Mr. Ravi Valecha is an experienced banker and financial services professional with an expertise in factoring and supply chain finance, and he's the current CEO of our company, India Factoring. We welcome you, sir. Now, let me set this discussion in motion by introducing you all to each topic. Today, we'll be having discussions on the current economic scenario in the country, some insights about MSMEs, exports, etc., and last but not the least, about factoring. I would now like to request Ketan sir to take the helm of this discussion by answering our first question. Sir, you've had been in the banking industry from the year 1991, so that's almost a 30 plus years of career. So, sir, how has your journey been throughout, and how has it led you to join RXIL now?
Thank you, Jasdeep, and thank you, Ravi, for this wonderful show. I've been following this show, so thank you for inviting me, and it's been a pleasure to be on the show here. Yeah, so it's been a great journey, if you ask me, because we have. I started my career in the initial days when the bank said, the privatization had not begun; it had just started, and that's where the journey began in 1991. And from it's been a fruitful journey for the last 30 years, from one bank to other. So they basically have changed three banks, or they majorly, where I worked with Bank of Baroda for 3 years, and then moved to Standard Chartered, moved to IDBI, the Bank of Tokyo, and then Standard Chartered Bank. Standard Chartered Bank is basically where I've been working with the trade finance department, heading the operations department. When I moved out from operations role to the sales role, they've been having. And when I went into the sales role, it was basically handling the strategic clients over there in the transaction banking role over there. And from there, I moved on to Barclays Bank, where the opportunity came to become the head of trade sales over there, and I was the head of trade finance over there for quite a long 8 years over there. And from there, I moved to RXIL, Receivables Exchange India Limited. So this is a journey, in the sense it's been a wonderful journey, in the sense that. When someone asked me that, look, all across the major part of your career, you've been in a MNC bank, and then you're joining Receivables Exchange India Limited, which is a public sector kind of a setup where, the five financials are all strong banks of India. Then how do you think the transition? So I said, look, this is something which is interesting. And that is, and actually it was a faith that you're joining something called as Threads, which was just a novel idea at that point of time. In 2017 it had started, 2016 it had started, and 2017 the transaction had gone live with Receivables Exchange India Limited. So to join that organization was a big challenge, in the sense to join over there. And from there the journey has been upwards all across. There has been a fantastic growth for the Threads platform. The uptake of the platform, aided by the government initiative, has been tremendous, where we are working with the government hand in hand to see how we can increase the uptake of the platform. In fact, this is a platform which is not seen anywhere in the world. So India has been innovating in that front. And especially when you talk about receivables financing, I come from a background where when you do receivables financing, you do it only a selective receivables finance program, where you do it only selectively for the large suppliers above particular grade. And here is a program where you have it for the lowest denominator in the ecosystem, for the lowest supplier in the chain. So it is a different program altogether. But it is getting to a lot of changes. The mentality of the corporates coming on the platform, which was not there earlier, and now it is. You can see a total difference in what it is now. The platform, now the corporates are more willing to join the platform, and the requirement is that, look, can we do non-MSMEs also on the platform? So they are seeing a huge sea change from the attitude of the corporates who were earlier resisting to join, and now the corporates are asking that, can you do non-MSMEs also? So that is the whole change, quantum change. And when I talk about RXL, where we were doing around 200 crores per month, when I joined, we were doing around 2,300 crores a month. Now we're doing, per annum, 2,300 crores is something which we have clocked in 2019-20. Now 2,300 crores is something which we're doing in a month. So it's a phenomenal increase of 10 times the volumes, 10 to 11 times the volumes have increased. So that is what it is. The journey has been fantastic in RXL.
It's rather been a very interesting and an impactful journey, sir. Now, RXL Global has signed a financial agreement with India Factoring and Finance Solutions Private Limited recently. And I'd like to ask both Ketan sir and Ravi sir, like, what plans, ambitions, and vision do you have with this tie-up? We'll start with Ravi sir.
Yes.
Yeah, thanks, Jasdeep. Ketan, hi. Of course, this is a new initiative by the ministry, under Ministry of Finance. A separate, gift city has been opened in Gujarat, Gandhinagar, under the domain of IFSC. As Ketan mentioned, Threads has been a huge success. Of course, any new initiative, to the extent what it is, it's a path breaking reforms. I would say a disruptive initiative in the Indian financial services industry. Uh, Threads has now started creating numbers, big numbers to that extent, and which is being reckoned and recognized by the international agencies, international chambers of commerce, and the likes of the world, whoever monitors trade numbers. Similarly, IFSC is a new initiative being replicated on the global level. As expected, it is the new initiative, so it will take some time to move towards those big numbers. But any new initiative is a disruptive process in itself, and obviously that's why we are in an industry, that is India Factoring is in the industry, and as a leader in the India Factoring space, especially in the cross-border export factoring, and that's why we have to be the first ones to be partnering with the leading exchange like RXIL, and that's why we have tied up with RXIL, and to bring the new initiatives to the implementation stage. This is new initiative. We are already in the regular factoring space on the cross-border factoring, already being the leader as per the FCI numbers. This initiative brings in the digital capabilities where the buyer, seller, everybody, and the financier, all of the stakeholders are on the platform, and to be there on the platform to do these transactions is a new, I would say, a channel being provided to the customer. In future, this is expected not just to open up the domain for the Indian sellers or Indian exporters, This is also expected to possibly include other geographies also, because this is being part of the gift city, which is an offshore location within the Indian borders. So that will open up a new dimension. Of course, it will champion through the Indian exporters initially, but then obviously it opens up the market, which is across the world. So as such, it's a huge initiative from the government, and I'm sure that this initiative will be a path-breaking reform, like there has been other reforms in India. And I am a strong proponent of factoring space, and that's why we are one of the first ones to partner with RXIL to take this initiative further. Thanks.
Yeah, so I'll add to what Ravi has said. Look, this is a huge initiative, as what Ravi has reiterated it. It's a initiative where you look at it this way. Look, now today's the geopolitical scenario. Now we see that there have been alternatives being looked at upon when you have a particular country which is a major exporter being looked upon as where can we have alternatives to that country. I'm talking about China. So can we have a China plus one policy? So many Western economies are looking at moving away from China, and you've seen it recently also that look, there are Apple is also trying to move out, and how India is trying to garner that space too. So I would look at it as this way that look, India has got a huge potential in the sense in terms of exports, and that is rightly so because look, the government is working on many front on making India a destination which can be a major exporter for the economy. And if you read some reports also, which are very heartening reports, which say very clearly that India is going to lead the growth in the Asia in terms of 7.9. There's a report from Standard Chartered Bank, which talks about 2030, which talks about India leading the Asian economic growth, especially the export economies, where India will lead the growth by 7.9%. And there they are projecting that India will have a huge number of share in the exports market. So when you talk about all this, you definitely need to have an infrastructure in place, which will also look at the financing part. And when you're looking at the schemes like PLI schemes and the government schemes, which are Make in India schemes and Atmanirbhar Bharat and all that, which are schemes which are looking at 14 sectors to see how we can garner the exports and how can India become the major exporter over there. So when you look at these schemes, there is also a need to have an infrastructure in place which can actually support the financing of these transactions, financing of the exporters. So just imagine when you look at, even if you were to talk about MSMEs constitute around 40 to 50% of Indian exports. So if you were to look at the financing part, if you were just to take care of the financing part, this platform was to just take care of the financing part, he can focus in, and it's a digital journey. So the customer or the exporter can focus on the other things which are leading to how he can develop the quality of the goods or whatever. He does not have to focus one part, which is the major part about the financing. So this, I would say, this is a rail, or I would say the super highway which is being set up. I would say it in a very small similar terms that it's a huge opportunity to see how a super highway can be set up in terms of infrastructure to do the financing at very competitive rates. So look, there are financial centers all across the world, but who are these financial centers accessible to? These are accessible to only the large corporates or the large economies. The largest corporates can go and do the financing from India. They will go over there. But when you have a financial center in India, which is catering not only to the large corporates, but also to the MSME segment, and that is what I feel that look, that's where the platforms will bring in a change. This platform will be catering basically to the large corporates. At the same time, it will also cater to the MSMEs also. So that is the huge change which will happen over there. So we feel that look, once we have and these platforms have not been, I would say, they have not been duplicated anywhere in the world. This is an initial idea. It's an idea that look, why can't we have something similar to TREDS, or why can't we have something like ITFS, where you have the exporters, importers, and doing the financing over there. So, and where the most of the trade is going towards open account economy, open account. So this is where I think the ITFS platform will boom. But if you ask me whether it will happen the moment we are in the sandbox stage now, whether it will happen immediately, no, it will take some time. It'll take time to get mature. It will take time for us to develop this particular platform in terms of collaboration with various parties on how we can do the due diligence and other things, and how we can get online information on many other things which are required for a digital platform. And once that is there, it will be a huge success, because today the whole thing is all about digitalization of the entire journey for the exporter. And rightly said by Ravi, that today if you're doing this, tomorrow there is a possibility you will open it up to the outside world also, and especially to the lower, the economies which are surrounding us, the Asian economy. So that can also be a looking on this. So it's a great opportunity, and we're very happy that we have joined hands with India Factoring over there. India Factoring, again, being the leader over there, we are looking at them to guide us, because India Factoring has been a pioneer. I would rather say that they have been there working digitally and for the processes and other things. So we look at getting the experience from India Factoring. They're helping us and guiding us that this is how the things should happen. So we are looking at that particular aspect also from India Factoring. So it's a collaborative approach we are looking at. So we are joining hands with many financiers and many things for the sandbox testing. But what we are looking at it is that we are going to build a platform collaboratively, learning from the learnings which the people already had, so we don't have to do the same mistakes again. I would say that's what I would rather say that.
And Jasdeep, if I may add maybe another small bit, this platform, while there are numerous international platforms, numerous, I would say possibly maybe hundreds fintech players are there across the world who are providing these sort of similar platforms where the stakeholders are the buyers, sellers, and the financiers are on the platform, and they enable these open account trade. The prime difference between the IFSC initiative, as RXIL is now doing, and others also there, is that this is a regulatory enabled platform, and that's a huge difference. Ask any global corporate or the supplier or the largest of the MNC buyers why they shy away from these platforms, or what could be the apprehension, and that is that they are operating in the third parties world, which is not, and which may not be as compliant. And as you know, today's scenario in the banking and financial services world, compliance is a huge requirement. It's not just a requirement; it's a must-have enabler in place. Within that regulatory requirements, if the regulator themselves are enabling this initiative, then it sets a different tone, because you are doing all those compliances which a regulated entity is required, and that's what IFSC initiatives of these exchanges will be, that they will be regulated entities. That's a huge difference, and they will be required to comply with the regulations as like any other bank or non-bank. They will be doing the various aspects of enabling KYCs and various other things, and that's where the huge difference is there, and that is expected to propel it. Believe me, there is no such initiative on the cross-border front across the board, and that can pave the way for India to rise in the growing dynamics of the world as we are seeing in the other areas also. Thanks.
Thank you, sir, for your response. Now, sir, strong macroeconomics fundamentals have placed India in a good state compared to other emerging economies around the world, says World Bank, and they've revised their growth estimate to 6.9% now. So, Ravi sir, what according to you is specifically going in the right direction for our country and to justify this growth?
No, so I'll give you a perspective. So India's exports India were in March 2022 were $650 billion, out of which merchandise was close to around $400 billion, and the rest was service exports. So this year, that is FY23, it is expected to rise up to $800 billion of total. So this is a huge number growth which India is already incorporating, considering the changing dynamics. Now, and India is already a $5 trillion plus economy, and expected to possibly upset or rather, India is at the fifth position now across the world, and it is expected to possibly climb up two notches higher up in next few years. Now, why this is happening, you need to understand the perspective also, because there is a global change in the dynamics across the world, which is putting India in one of the leadership positions on the supply chain front. We are all seeing the impacts of the pandemic which has gone by, and following that, the various other geopolitical situations. So, obviously, in today's environment, the global corporates cannot operate in an isolation. There is a huge dependence on the growing supply chain across the world, and we saw in the initial phases of pandemic, when the supply chain was disrupted, the entire manufacturing capabilities were disrupted also. For want of possibly one chip, the entire vehicle which is ready could not be supplied to the customer and customer, right? So this is has been happening, and that's why the world has realized now that there needs to be a growing supplier base or a multi-pronged approach which needs to be adapted rather than relying on a single supplier base. So cost is not just the one element which will decide these. There are other requirements also, be it political, be it health, be it any other geopolitical situation, changes situations. So there is a growing emergence of China plus one, China plus two, or possibly three strategy, which is being adopted by the global MNCs. We recently read about Apple shifting the manufacturing base completely out of China also. So that is also going to be playing a huge initiative across the world, and that's where I see the opportunity for India amongst few other countries to rise up to that occasion, and I believe that India is rising up. We recently saw also an announcement by the global semiconductor manufacturers, Vedanta being the first ones, and a couple of other conglomerates also taking up that initiative. So $30 billion plus of investment coming in the semiconductor space also itself. I know a customer who's already putting up a 100,000 square feet facility only for one buyer in the US. So they are growing instances where the supplier requirement is coming and moving to the Indian suppliers, and that is because of the changing dynamics of the political geopolitical situation, rising leadership, stable government, infrastructure capabilities being adequately ramped up. So all these and reforms, we saw the GST reforms itself was a big enabler, which is I would say rising blocks for trades also. So all these things put together is creating an atmosphere where India can rise to that occasion and deliver to the world at this stage. I see that next 10 or maybe 2 decades at least is the rise of India amongst the global world supply chain.
Thank you for your valuable insights, sir.
Thanks.
Ketan, sir, small and medium-sized enterprises in India contribute a third to the national GDP, comprising almost half of the exports and employ a fifth of country's workforce in India. So, how does supply chain finance help these SMEs to establish their footprints globally?
See, look, when you look at the trade finance, okay, trade finance actually comprises of open account and the documentary trade, as well as the open, the supply chain financing. So their focus is more towards shifting to the open account or the supply chain financing over there. So supply chain financing primarily, look, if I were to just talk about from a close prism of trades alone, when you look at trades, look, the three exchanges have been doing businesses worth around, this year we are saying that we'll do around 75,000 crores. Three platforms put together. That is almost $10 billion. $10 billion of business is being done on the supply chain finance and open account. And this is the business which was not there, which never existed earlier. And this is primarily when you look at the MSMEs, when you look at MSMEs financing, it comprises, there's a report which says very clearly that 40 to 50% of MSMEs financing of informal or formal financing, or the informal is informal financing which happens. When you talk about informal financing, it is lending it from your closed sources, or you take the promoter taking the funding rather than taking the company, taking the name of the company. So the supply chain is bringing up a huge amount of change, and supply chain financing is basically driven by the digitalization also. So here you have a platform. Here you talk about, when you supply the goods, you raise the invoices and you put it on the platform, and it gets accepted, and it gets financed. So the supplier does not have to go around asking the corporate about his financing, or rather his invoicing, when it is going to get paid. So there's a huge amount of change or the churn which is happening, where this supply chain financing, the focus is more towards getting the supply chain financed on digital platforms, I would say. And I would say that digitalization is the most important thing which is driving it. Here we have corporates also now today looking at the financing, and they're saying that, look, can you do it for non-MSMEs also? So this is bringing about a good amount of change. So when you're looking at, and today when I look at my organization, I always say that, look, today we're around 2,000, 300,000 crores, but over 2 years, 3 years down the line, it should be 6,000 to 7,000 crores, you know, per platform, per month you should be doing. And this is what we're looking at. And this is something which is simply, in the sense, from the working capital financing. Now, this is also part of working capital financing, but this is cash flow financing, in the sense, the moment the invoices are there, you get it financed, and the MSME has got the cash. Just imagine the velocity, that the way the money is moving, where the money used to be coming to the supplier, the MSME supplier, after 45 days or after 90 days. Now here you have a benevolent, or you have a corporate who sees that there is a supplier on the other side who needs to be supported, because when you have, there's the whole dependence on the supply chain. When you talk about, and it is very clearly said that your supply chain is as weak or as strong as the weakest link in the platform, in the supply chain. So that means if you have even a small MSME supplying to you a very critical good, and if he collapses, then your whole supply chain has a tendency to fall down. So that's why the corporates are very keen on supplying, or rather getting these corporates, these MSME corporates on the platform, or getting them financed, ensuring that they have the adequate finance or the liquidity. So, and just imagine that corporate, that MSME which is used to get the finance after 45 days, now is getting the financing after 10 days, or that 5 days or 11 days, or whatever it is. He can rotate that money 4 times. He can do the purchase order 4 times. So this is what we are looking at, and that is increasingly we are seeing it, that the more number of transactions, the clients are more happy that they're getting the funding earlier. At the same time, the corporates are also ensuring that they also get benefited, in the sense, today if my supplier is getting the, where he used to get the cash, or where he used to get the payment after 90 days or 45 days or whatever, now if he's getting the payment on the 4th day or the 5th day, they also tend to ensure that pass, that benefit of the rate also comes to the corporate. So we have seen effectively corporates also negotiating with the MSMEs, or the corporates, the MSME corporates, that getting the rates reduced also. And with the corporates, MSMEs are readily or happily happy to pass it on to the corporate. So effectively, you have the cost of goods also getting reduced for the corporates, and that is the biggest benefit which the corporates enjoy. So effectively, and when you see that the liquidity is there for the corporates, MSMEs, we feel that it's adding to more growth, or adding to more support system to the supply MSMEs. We have seen increasingly the states coming across on the platform. And why they're coming across on the platform, the idea is very clear, that if we support the MSMEs in in our state, they will get support. If we enable that they get the payments early, they can employ more number of people. So that can ensure that I am generating larger employment for the MSMEs, which is the focus area for the entire set of governments, including the central as well as the state governments.
Thank you for your response, sir.
Yeah.
Now, over the last 9 years, merchandise exports from India have hovered around 260 to $330 billion, with the highest ever being $330 billion in the year 2018-19. The government has set up a target of $1 trillion exports by the year 2027-28. So, Ravi sir, do you think that this is an achievable feat, and how will factoring help to achieve this?
Now, obviously, we talked about it, the numbers and the projections, what the government is setting year on year, the targets, and we have also talked about the emerging, the changing dynamics of the world supply chain where India could be one of the largest beneficiaries. And also, I touched upon the goal of India to be a 5 trillion economy by 2025, and we are already 3 trillion economy. So, from all these matrix point of view, I think we are well positioned as of today to move towards that target what has been set. And factoring, as I have always mentioned, that I'm a huge proponent of a factoring and an open account supply chain since beginning of my career, because why you also need to understand why the factoring is the go forward strategy. We all know the trade finance which has happened historically is on the back of a documentary credit, which is called in common parlance as LC, letters of credit. Now, why LC was there was that the world in possibly 10 years, maybe 20 years, maybe even 50 years back was completely operating in a different silos, I would say, where the buyer and the seller possibly met each other on a or spoke on the phone once in a while. The information wasn't available readily as such about the buyer's credentials. So how do you create that sort of a trust? Now, the trust was created through the mechanism of a bank, which could be present across geographies, and that was through the LCs. Now, in today's environment, as information is available on the click of the buttons, each and every report what you want for the buyer or the seller or any stakeholder is available on the digital mechanism at readily available. That has created an opportunity for more trust. The digital capabilities, we are having these web conferences, right? Even the buyers and sellers can see each other, talk to each other in a real time basis. So that has created more openness, and that's why the move towards more open account trade. And globally, there is a huge trend of moving from an LC backed structures to an open account transactions. It is not only a trust factor, but also the convenience. The LCs and others, Ketan will agree with me wholeheartedly, is that creating an LC, opening an LC, and possibly doing a transaction under an LC is a hugely tedious process which involves documents, scrutinizing each and every clauses, and possibly whatnot. So from that perspective, it's a very tedious and a time-consuming process. Against that, an open account transaction is very simple to manage, and factoring to that is comes to the support of the open account transactions, and that's why there has been a growing prevalence of factoring and supply chain finance across the world. Factoring gained momentum somewhere in 1960s and 70s, and possibly by 90s it was a huge growth factor. Of course, what happens in the West possibly comes down to India over a period of time, and that's where we are seeing the emergence of factoring in India now. And more corporates are agreeing. The numbers itself tell the same story. The Treds has brought in new capabilities also, and I believe that IFSC platforms through ITFS, I'm sure that will also bring in more capabilities. Today, what we are seeing out of that $800 billion number, which I quoted for FY23 exports, I would say all put together, all export factoring, banks, numbers put together under open account factoring space, the number would be in the range of around $2.5 billion itself. Of $800 billion, only two and a half. And I see an opportunity under open account today around about 80 to $90 billion. So you can just understand the gap which is there. I'm not saying that $78 billion is not getting service. They are getting service under the regular banking mechanism, not under factoring. So that's the space, a ready opportunity. And as we speak, each day, each minute, that number is growing because the LCs are slowly getting backdated and obsolete, and the factoring is getting more and more prevalent. So it's more also about creating awareness among stakeholders in Indian financial services space, Indian corporate space, even on the supplier base at the remotest corner. That is the ask from all the stakeholders present, that the creation of the awareness amongst the regulators, among the market. I believe that is gaining pace now. We have seen numbers increasing year on year, or by ourselves also, and now with the stakeholders other than us coming into the fray, Threads being one of the huge contributors also, I see a huge growth of probability for the factoring, and factoring could contribute a huge portion of that international trade. Thanks, Jasdeep.
Thank you for the valuable insights, sir.
Jesse, I want to add over here.
Yes,
I
sir.
want to add over here. So look, you mentioned about India's, the manufacturing exports, manufacturing growth. So if you see, look at it, it has shown a tremendous growth over the last 2 years. And the figures were around 418 billion is where we are. So what is the government doing actually? And we feel that look, the government is looking at some 6-7 sectors to add to this $1 trillion dream by 2028. So they're looking at chemical, pharmaceuticals, electronic, automotive, industrial machinery, and textile. So these are some major industries which they're looking at. But what are the government is doing? How is the government trying to enable? And where is it important? So it's not about only getting the talking about, or they actually taking steps. So what are they doing? They're talking about building trade ties. So you look at various agreements which are being signed, and the latest one was being with the UK, which came under controversy, but anyways it is getting signed. So with different governments, we are signing up we are having the trade ties. At the same time, it is boosting manufacturing. When you look at the government, this PLI schemes and many other schemes which are looking at, PLI, Make in India, Atmanirbhar Bharat. These are the schemes which the government is looking at, to manufacturing, give a boost to the manufacturer. Then you're creating an enabling infrastructure. So when you're looking at the enabling infrastructure, you're looking at building the highways, super highways, and the latest one being the Nagpur highway, which is connecting to the Nasik, and from Nasik it will come down to Bombay. And when you look at the thought process behind it, that is very important. So that's why this infrastructure is also very important. And when even Ravi mentioned about the semiconductor industry, to set up a semiconductor industry is not so simple. The requirement is huge, in the sense, in terms of it should be completely a dirt free environment. The water which is required, the requirement of the water is too high. So these are the things which the government is looking at the same time. Talking about infrastructure, I also look at ITFS also as being one of the most important infrastructure which is being put in place. So ITFS also will be an infra, because it's a financial infrastructure. How will you ensure that tomorrow when you have the exporters doing the exports, how will you ensure that the exporter financing happens at a competitive rate, which is globally competitive rate, and then that's how your exports will become competitive. So that is also one of the things. And lastly, the thing is about digitalizing the entire thing. So that's where the project like Gati Shakti, the NLP, National Logistic Policy. So these are the various policies, which will come into the being, or which will come into the picture. So this is something, when you look at it from the strategic point of view, you feel that these are all Lego pieces which are being fit, and when they fit, you will see the complete picture. So these are the things which are working together, and we work with the government departments also, and we see the kind of contribution, or kind of inclusiveness with which the government departments are working to ensure that what are the things which we need to do to ensure that the things are put in place. So that's what I feel very positive, that $1 trillion, we might even surpass that $1 trillion also by 2028. Can you hear me, Jasdeep? Ravi, can you hear me? Yeah, Ravi is just frozen, I think.
I think he must have lost connection.
There's a question which just come.
Yeah. So Vinod Vasan is asking to you, does the corporate buyer has right to dispute invoice after receipt of goods, or at the later stages after the seller receipt factor payment through the platform?
Yeah, so this the Trades platform is very unique in the sense, what it says very clearly, that today, when till the time the invoice is not factored, there is a possibility that the corporate can come and say that there is some performance issue, or I want to reduce the value of the invoices. But once it is financed and once the seller has received the factored payment through the platform, then it has to be taken outside the platform. So that means before the financing, if the corporate says there are some performance issues, he has the full right to go and reduce the invoice value, or reduce the invoice value. But once the financing is done and the supplier has received the payment, then the corporate and the supplier have to take it offline, and they have to settle the dispute between themselves. But because the financing has already happened on behalf of the corporate, so then the corporate needs to make good the full amount to the financier.
I hope, Vinod, that was answered successfully. Thanks.
Uh,
Jasdeep, you're back. Please take it forward.
yes, actually, there was an internet issue from my side, so I got off a little bit. So, Ketan sir, can you please tell a bit more about TREADS and how it helps to address the liquidity issue for MSMEs?
See, the whole threats came into being because of the delayed payment issue problem for the corporates, for the MSME corporates. Because MSMEs, though, though they, I would say that they are the critical suppliers to the corporates, but they never get the payment on time. So it's always the patriarch, or I would have said that it's a patronizing attitude where the corporate says that, I will decide when you will supply, but I will decide when I'll make the payment. So that's not done. So, the corporate, at times the MSMEs have ended up losing money, and at the times the MSMEs have also ended up losing, giving up the money, as well as at the same time saying, okay, fine, I don't want to follow up, and I don't want to waste my time. So that's why the TREADS platform came into the being, where the MSMEs now get registered on the platform, the corporates get registered. Initially, if you look at it, there was a resistance from the corporates to come on the platform, because look, this platform instills discipline. In the sense, today when you have two invoices in your let's say if I'm a corporate and if I have two invoices, one of the invoices has been factored on the TREADS platform, the second invoice is not factored on the TREADS platform. For the first invoice, I have to ensure that I keep the money in the account. For the second invoice, which is not factored, where I have to pay it directly to the supplier, I will say it's okay, yaar. I mean, I will pay it afterwards also. I'm not going to run away. But for the first invoice, which is factored, I have to ensure that I keep the payment, I have to keep the cash in my account, so the bank can debit on the due date, because otherwise I will get defaulted. I will be declared as a defaulter. It will come as an overdue in my statement, in my reporting. So that is a whole lot of a difference which comes over there in play. But what we have seen over a period of time is that corporates are now adopting it wholeheartedly. Corporates are ensuring that they make the payments. They, at the same time, they also ensure that the cost of the goods is also getting reduced for their procurement over there. So what we have seen is that over a period of time, we have seen that the MSMEs end up making a good amount of money, in the sense they are saving on the interest cost. Because at the end of the day, look, when the MSME is supplying to the large corporate or any corporate, he's borrowing from somewhere. Either he's borrowing from his own resources, or he's borrowing from the banking industry through by ways of he would have kept his collateral, or he would have kept his garage or warehouse or something like that, where as a collateral. But when he gets the invoices, and when he gets the invoice and the invoices are financed immediately without any collateral or without any risk to him, he goes and liquidates that particular loan which is taken. So we have seen corporates like the large the MSMEs even discounting it for 3 days also, or 4 days also. The residual period is 3 days or 4 days. Still they come and do the discounting. Why? Because I don't want to follow up with my corporate to get my payment. At the same time, the payment which is received by me earlier by 3-4 days also, I'm ready to bear the interest. So we have seen. And secondly, look, it is a price discovery mechanism. So the best part is it's completely price discovery over here. So the corporates are also enjoying, because when you look at it from the corporate's angle, the corporate might be having supply chain mechanism with 2 or 3 banks. Normally they have large corporates. We have 2 banks. One bank will be the primary bank, and the secondary bank will be there. And now, to be very honest, these guys talk to each other. In the sense, the bankers talk to each other as far as the rate is concerned. When the corporate goes and tells one particular bank that you please reduce the rate, he will say no, I'll not reduce it, or whatever. He'll give so many reasons. At the same time, he will call up the other bank also. It happens. I mean, I've been doing that. Look, so they informally decide the rate also, that, let's not go below this. But when you have a price discovery mechanism where you come on the platform and you do the discounting, where the price is decided by the financiers depending on their liquidity as well as the credit grade of the corporate, then there's a whole paradigm shift. We have seen corporates which are doing the financing at 7.5% with the supply chain, and on the platform they might be doing the financing at 6.5 or whatever. So there's even 1% or 45 basis points difference is a whole lot of difference where you have a whole lot of large purchases. So effectively, it has helped the corporates, it has helped the MSMEs to a greater extent, because MSMEs are receiving the cash immediately. So that's what I would say, that look, it's helping over there. At the same time, it helps them with their production cycle as well as the liquidity.
And also, I'll just add two bits here. This and to the growth, I would say that pandemic has changed the dynamics, as we talked about earlier. Earlier we all knew that the supplier was dependent on the buyer, the large corporate buyer. Now the corporates also realize that there is a fair bit, and the market also realize that there is an interdependence, not just dependence on one party. It's an interdependence. We have realized the importance of the supply chain. As I gave the example, even one chip not being there, the entire product is in the inventory. Even if it is a finished good, it's just lying in inventory, cannot be sold. So that's why it is more of an interdependence, and that's why corporates more and more are getting towards factoring and trades and supply chain mechanisms to enable that sort of an environment. So it's not just about now being what's in it for me, but now it's more being a mutual interdependence, that they also turn out to be more sharing and caring and understanding the being a business requirement also to enable such requirements. So that's why we are seeing the growing prevalence of supply chain finance mechanisms like trades and normal factoring, where buyer plays a large role and an enabling role.
And secondly, it's completely digitalized, so it's completely digital. So unlike a documented trade transaction where the LCs are issued, if I were to just talk about briefly about how the LC is issued, then it goes to the beneficiary, then the beneficiary supplies the goods, then the beneficiary has to prepare those documents, go across to his bank. Now that his own bank will send it across to the issuing bank. Once the issuing bank then forwards it to the applicant, which is the buyer, then the buyer gives the acceptance of the documents. Then the acceptance goes back to the negotiating bank. So the whole cycle which used to take around 15 to 30 days, plus the whole, about issuance or LC charges and all that. So the whole thing has got reduced. Whole the transactions happening speedily, invoice-wise tracking is there. So all these things actually add to the, because you look, at the end of the day, there is a cost also involved in processing these documents manually. Cost of couriering it across, sending it across, time is lost over there. So that's why it is, when we have seen many corporates saying that, look, where I used to issue LCs, now I don't have to issue LCs. I'm saving on the cost over there. At the same time, once I've accepted the invoices, the MSME is receiving the payment the next day. So it is getting as a most preferred option for most of the corporates for doing the payments.
Thank you for the response, sirs. So now we know that India recently got its G20 presidency. So Ravi sir, how do you think it will impact the global economy?
So that's I would say more generalistic. I would say, but I can give you a very generalistic answer towards that. It will definitely impact. Obviously the presidency coming to the India. Obviously, I know already some initiatives, the global initiatives, which are looking at India for these global forums to be, to bring in the global stakeholders to India. I already have one request for coming in from the group company of ICC, that the initiative will be conducted, that the next year's initiative will be held in India. So that's a change which is already being seen, and I'm sure that with that change, there will be hundreds of more which will come to India, bringing in stakeholders. That is not just the buyers and sellers, possibly other financiers, other market stakeholders, and even the tourist. Why not tourism also is a big industry. So even that is expected to bring the change. And I'm sure the leadership will also be recognizing, and we are reading it in the news that they are recognizing already that what India can bring to the fore, and I'm sure that will be a huge enabler for growth of India story.
See, I'll add, Jesse, I'll add over here. So the look, the G20 presidency, the theme for that particular theme, which is what I love. The theme is Vasudeva Kutumbakam. Whole India's whole universe is our family. So, and when you look at it, this 20 nations, they contribute to 80% of the trade which is happening between the countries. These 20 nations are so powerful that the global trade, 80% of the global trade is happening through these 20 countries. So that's why it is very important for us to, to establish the trade ties. At the same time, look, being an all-inclusive economy, or I would say that, look, India very clearly says that, it is not really going to talk about only the India part, but it is also going to talk about the Asian economies. So in a way, India is establishing itself as a leader in that Asian space over here. And India is a force to reckon with, if you look at it the way, and we are in a better spot, if you ask me today, we are in a better spot in terms of the way the Indian economy is moving, how we have toppled the fifth economy and we have become the fifth economy, and we are looking at those two economies to be toppled, and we'll go to the number three. But I would say, look, there are many things which are happening behind that. How can we initiate great ties, the trade ties between these 20 countries, and that's very important. How can, and these are the decisions. So I would look at it from the perspective that, look, it is not going to be the same like what normally the G20 countries do. It will be different, and since India is leading it, it will be different. It will not be another G20 event or a G20 thing. That the themes will be different. Themes will be to inclusive approach. At the same time, how can we ensure that the Asian economies are also taken care of? So India's, look, we should be proudly saying that, look, India is emerging as a power to reckon with. And India is coming as a thought leader in terms of leadership for various issues. India is looked upon to solve or resolve many crises also. So that is a positive thing which you're looking at, and it has come at the rightful time. It has come at the time when we are going to be looking at, and at the same time, look, you are saying that very clearly that India is going to maybe at the thought process which is going on is that India might be the factor. The India might take the gold out of the recession. Maybe it's a very optimistic statement, but this is something which is being talked about, isn't it? So I think I look at it as a very positive development, where many issues, especially related to trade, will get resolved. At the same time, there will be greater ties which will be happening at the strategic level.
Thank you for the insights, sirs. Now, Ketan sir, RXIL has recently entered into an agreement with India's premier export financial institutes, Export Import Bank of India, EXIM. So, sir, what is the purpose behind this partnership, and what do you aim to achieve through this?
See, look, Export Import Bank is a premier institution in India, in terms of exports and imports, and it's a government institution, and it is looked upon to promote Indian exports, in not only in terms of the merchandise exports, but in terms of the intertrade agreements which happen between the governments. So we are looking at Exim Bank as a very important partner, and it's a testimony that, look, they have agreed to sign on it because they believe in the ITFS platform, and they believe in the ITFS platform, and they feel that this platform is something which can actually help the economy in terms of how the financing can happen. So we look at them, we look at Exim as a thought leader coming in and guiding us in various things. So there might be some explored markets, unexplored markets also, which we might not look into in terms of today when we're doing normal merchandise export. But when you look at Exim also, Exim has a good long history about the agreements which they undertake on behalf of the government. There can be a government agreements with Africa, or there might be Venezuela or anything like that. So that is something where we feel their expertise will help us in reaching out to those particular constituents also where India is exporting. So we feel that, look, this is the arrangement at the level where tomorrow there can be a possibility that once India Exim Bank is signed up, through India in Exim Bank's collaboration, there might be tie-ups with Exim Banks of different countries also. because they have a tie-up with the other, because you had, and through SIDBI also the same thing. So we are looking at them, we are looking at Exim Bank as providing the I would say the expertise on how to reach out to the largest the largest constituents which work collaboratively with the government of India. So we're looking at that front over there. But at the same time, they also have an intent to do factoring on the platform. So that expertise also they have already there with them. So that's where we feel that signing up with institutions like Exim Bank, even for the matter India Factoring also, does provide a good impetus that we are going in the right direction, and there is something which we need to do collectively and not as an individual, or not as an
Thank you.
individual company.
Right, sir. No, Ravi sir, India Factoring has recently partnered with the Vayana network. So could you please tell us about this collaboration and what does this collaboration aim to achieve?
Thanks, Steve. This is the initiative. We see ITFS to be the paradigm disruptor for the Indian trade finance space, not just India, the global trade finance space, as we spoke about. And there are four licenses which have been approved in the initial stage, and we are the leaders in the export factoring space, as I also mentioned. As a leaders, we look at this initiative as a very, very disruptive initiative, and that's why we are tying up with all the exchanges who have been given the licenses, and facilitate as much as possible the trade development, the factoring development, and that's what you will read about others also. I'm sure you have read about others also. So that's where we are tying up with all of them. It's not just one, and no exclusivity. We are tying up with everyone to initiate that step, because the market is huge. The market is huge, and as I mentioned, the gap, the trade financing gap on the open account space is huge, and that needs to be covered. I would not be surprised at later stage that the government invites more exchanges to be there, because the country is so huge that to cover the length and breadth with only few exchanges is possibly impossible at this stage. We have already seen even in the trade space where further licenses have been given. So the initiative or the ask or the position of the government is to enable finance and provide ease of finance to multiple stakeholders across the length and breadth of the country. If that means enabling more exchanges, more facilitation centers. How many banks are there today? Possibly hundreds, right? How many NBFCs are there today? I think hundreds and thousands of possibly NBFCs are there, and we are seeing emergence of numerous fintechs also. So that's where I see that the stage is set right. That there will be exchanges, there will be fintech platforms, there will be other enablers also being put in place. And as the leaders in this space, we would want to partner with as many possible to provide that sort of a coverage across the length and breadth. Because as an entity today, our coverage might be limited, frankly speaking, and our our focus or our value proposition is that we want to reach the last mile of the exporters in India. That's what our flagship product is, and to enable that supply chain capabilities through factoring product. And the exchanges provide that right mechanism to reach the length and breadth of the country, and that is a value add for us. So you will see more such partnership emerging. I'm sure, like Ethan also mentioned, there are numerous banks being facilitated to be onboarded. Most of the banks will get onboarded. Most of the and non-banks possibly later stage also will get onboarded once they are capacitized to do import-export transactions. So you'll see more such emergencies, and that's one small step for India Factoring to take at this stage.
Right. Thank you for the response, sir. Now, due
Definitely.
to paucity of time, we have to conclude this discussion here. I would like to express a heartfelt gratitude to our eminent panelists. And thank you very much, sirs, for the valuable insights. I'm sure the audiences found the discussion to be extremely knowledgeable and valuable. However, if we were unable to answer a few more questions, you can reach out to us on LinkedIn and we'll try to answer your queries. Last but not the least, a big thanks to India Factoring for providing the platform for this discussion. India Factoring offers working capital solutions through its factoring product aimed at converting our receivables into cash and is the market leader of export factoring. Must visit our website to have a deeper understanding of our products and to have your financial needs fulfilled. Also, do not forget to follow us on LinkedIn. Thank you very much for joining us with everyone. Have a wonderful day ahead.
Thanks.
Thank you.
Thanks,
Thank you.
Ketan. Pleasure
Thank
speaking.
you.